Asia's worst-performing currency heads for another tough year. The Pakistani rupee is set to end the year as Asia's worst-performing currency, and the losses are seen extending into 2024. The currency has fallen about 20% against the dollar this year, and analysts say its troubles are far from over. BMI expects the currency will fall to 350 rupees by the end of next year, while Karachi-based brokerage Topline Securities Limited sees it dropping to 324 rupees. It closed at 285.64 rupees on Monday. Consumer climate, downward trend stopped for now. Consumer sentiment in Germany remains overall stable in November, with no significant changes. Willingness to buy is growing slightly, while income expectations have experienced a slight decline. Economic expectations remain almost unchanged compared to the previous month. The forecast value for the consumer climate for December is at -27.8 points, and thus 0.5 points above November, revised to -28.3 points. These are the findings of the GfK Consumer Climate powered by NIM for November 2023. As of October 2023, it is published jointly by GfK and the Nuremberg Institute for Market Decisions, NIM, the founder of GfK. U.S. outlook: one thing leads to another. Economic pain is likely in 2024, but that doesn't mean stocks will struggle all year, especially if there is a continuation of the rolling recessions that have hit the economy. Don't fight the Fed is a decades-old mantra. Higher for longer is a newer reference to Federal Reserve policy amid what has been the most aggressive monetary policy tightening cycle in more than 40 years. As we approach 2024, there has been no diminution in the recession versus soft landing debates thanks to a cycle filled with crosscurrents in terms of economic data and inflation. A key characteristic of 2023, one we feel will persist into 2024, is the inverse relationship between Treasury bond yields and stock prices. New Zealand Institute of Economic Research, Incorporated Media Release, November 28, 2023. For immediate release. The easing in inflation pressures in the New Zealand economy is becoming more apparent, reflecting a combination of softening demand and increased supply. Although the Reserve Bank of New Zealand started increasing interest rates in October 2021, the dampening effects on demand have become more apparent in recent months. Many households are rolling off historically low fixed-term mortgage rates onto significantly higher rates. As households pare back on discretionary spending in the face of higher mortgage repayments, the effects of weaker demand are broadening across the New Zealand economy. Thank you.